Hello, everyone. This is Teddy Keckstaff from Forex Trading Unlocked, and we are here on September the 16th, 2020, with the live Forex analysis for you. And before we get into anything, we're going to pull up our disclaimer just to remind you that this webinar is for educational and learning purposes only. That is it. So it's been a while since we've been around, and that's because we've been readjusting much of what is going on for how we deliver our content. We have proprietary content that we supply to our customers that we have maintained during all this stuff, but as far as our free content, we've had to restructure a whole bunch of things, and now we're starting to get it down, especially because of the location. We're not bouncing off of Chicago anymore. We've had to redo basically how we route and stream everything because of events that have happened over the past few months, and now we're just taking the route. So now we've had to get the stuff out too. That's what we've had to do. So we are now going to take a look at our live screen. We have the dollar index here. So what's going on? The dollar index, as you can see, has been kind of a mixed bag of goods. If you really look at it over the past month and a half, it had seemed to be an aggressive bear. It bottomed on the first trading day of September, and so far has made a higher move high, a higher move low, and we're kind of like right in the middle of it right now. Now, it is a Fed day, so remember that when it's a Fed day, usually the currencies and most of the markets sort of dry up, which is to be expected, just because right now we're waiting more to see if there is a surprise statement coming out of the Fed than anything else, because we know that as it stands, most likely they are going to, one, not touch interest rates, not change their stance, because we know that they're going to keep interest rates where they're at supposedly until 20 or 23 sometime. So that means that as far as any interest rate trade, as far as the dollar and our interest rates is concerned, it's pretty flat. So that's probably not going to be disruptive. We have some economic numbers that are coming out, but right now, unless they really disappoint, I think that they're going to be fine. I don't think would expect any big movements, especially in the currencies. And once again, not even if those numbers are disturbing, I don't think we're going to have anything until after the Fed meeting. Now, then also remember that come 1:15 Chicago time, when the Fed meeting is over, the algos can kick in, and we may have a massive swing one way or another, or up and down, whatever, because that's what happens when you have meetings like this, even if they don't say anything. So there's going to be thin volume, which means that's a very scary trade. So if you're not on the right side, you're the wrong side, and you have to be very agile. So I would stay away unless you're already in and you have your defined risk in place. So with that, let's take a look at what is driving the U.S. dollar. The one thing we know is that the dollar index, like I said, this is in a flat line pretty much. It has set a range, and let's see. Okay, there we go. So basically, if you can see it, we came into this range, and this is where we've established our range over the past month and a half. Are we going to break out to the upside? We're going to go back to downside. We'll see. We could just bobble inside of this for the next couple of months, at least until we get through the U.S. election. So let's look at the euro-U.S. dollar. So the dollar has been under pressure today, but now all of a sudden it's starting to come back, especially versus some of the majors. Now, the interesting thing is that the euro has made a lower move low and a lower move high, and right now is rather neutral. So it could be set for sideways. Over the next couple of days, it could be set to make a breakout to the upside or the downside. It's looking a lot like the dollar index. Most likely the reason that is because the euro is the number one component of the dollar index. So we're seeing a stabilization here. Right now we're not looking for any trade. We do have a potential head and shoulders forming here, though. So this would probably be the one trade that I would look out for. It's the one that I'm eyeballing, is this one right here. So this is our neckline. This would be our shoulder. This would be our head. So this is our key high to pay attention to right here. So this high that was made just a couple weeks back, around 120.14. Anything above that, I would say, is going to be a breakout for higher move highs for the euro versus the dollar and a slumping dollar index. But I don't really see that happening just because of we're heading into the election. And for those of you that key off interest rates, there's a interesting spread happening now between the Euro Bund, which is the big interest rate contract for the EU, and the 30-year and the 10-year in the United States, just as far as where they're at in relations and what has happened over the past couple weeks. That being said, without getting into the whole interest rate intricacies, it would be hard for the euro to be a screaming bull right now versus the dollar because of this flux in the interest rate, because it just stretches that trade even more. So that's a whole different dynamic. That's gonna be a whole webinar on the fundamental dynamics of interest rate valuations with currencies. But anyhow, that is the one indicator. So that would go, meaning that because of that situation right now, I'm looking for this more to be a sell. So this is more of a head and shoulders formation that is forming, and definitely if we take out that neckline or even this last low here, which would be our last lower move low right here at what is this, 117.52. So a failure right there at 117.52, which isn't that far away. Think about the dynamics of this trade. For this market to sort of fall out of bed and maybe get back down to the 116 to 114 area over the course of, say, a month, I don't think it's going to be a violent sell-off. If there is one, that would be much more likely than to see us rally to, above $1.2014. Not that this market still isn't a bull market, but it is starting to show signs of weakness. So we're looking for that sell or those breakouts either to the upside or a failure to the downside coming in on that either rising support line from the neckline or the failure of the last swing low. Now let's look at the U.S. dollar Swiss. This market also had been stronger versus the dollar today, and now it is going back on its lows. Now this one here is looking like it's going nowhere, and probably, like I said, because of Fed Day, it's going to remain that way. This, of all currencies, I think, is definitely going to be in a flat line till 115. That part of the day, I think I can call pretty good. So anyhow. There's no real trade looking here. This is kind of like the euro, except in an upside down formation. I think that you have probably a better chance of getting a U.S. dollar Swiss rally than you do a break, but anything's possible. This one's more in the middle of the trade for that, and if it's setting a range, we're probably right in the middle of the range we're going to be in for the next month or two as we head into the election. But let's say the U.S. dollar bulls do come out to play. Well, then we would have a breach of 92, which would probably give us a shot at getting back to this 93 to 94 area. Even if we have any type of significant bullish move in the dollar, we're talking about a correction. The dollar has been under pressure for months, basically since the middle of March. So that's the thing that you have to look at, too, is that the dollar itself has basically been sold off versus most of the major currencies for 5 months now, 6 months. Not that means that long-term trend is not going to maintain itself, but the likelihood of a dollar correction increases with every day. So even as short as heavy as it looks and how much you want to short it and be a bear, eventually there is going to be a bounce. It doesn't mean it's going to happen now, not necessarily, but we are having the inklings. One of the things would be there's some moving averages and some other indicators where the way it's ebbing and flowing just in the short run for us to have just an easing in pressure versus the dollar versus most currencies, it's very likely. Now let's go look at the pound US dollar, which I know is something you guys really want to take a look at, because what's going on here? We had a bigger sell-off move here in the pound versus the dollar than we did versus the euro. This is what makes me leery of being a very big dollar bear. The other ones, they were bearish, or excuse me, the dollar was bullish versus those currencies for the same amount of time as it has the pound. The pound has had a much more extreme move. So this went from higher move highs to banging lower move lows, and right now is in a short-term correction off of that, because it's at least the bull trend is technically off the table. It's in a neutral trade at best, not necessarily bearish. Obviously, it's bullish right now over the past few sessions. But here's something you got to take a look at. Let's take a trend line here. So we go back to the low point back here in March. We'll spin that off of this low here. Okay, so the main trend, it took that out. Not necessarily meaning it's bearish, but it did bounce off of pretty much this high here. As you can see, it found support there. But that's normal. So the big question is, will this support hold, and are we going to get it? Is this, I mean, technically it is in a longer term bull market, and this could be a nice dip to buy, and then all of a sudden we see the pound versus dollar back at $1.36. However, I think the likelihood of that is probably, like I said, as with the same fundamentals that are going with the euro and the Swiss, I don't think that that's most likely going to happen. Here's the other thing: is you have trade agreements between the UK and the US that have to be hammered out before December 31st. You have UK and EU trade deals that have to be hammered out before December 31st, and we have EU and United States trade deals that have to be renegotiated before December 31st. All of these things, regardless of who is elected, it wins the election in the U.S., the same guy in office right now is the one who's going to handle these things. So it's going to be very hard for there to be any aggressive move, especially in these currencies right now, as far as being able to make a deal. Not to mention, it just works more in our favor if we have a weaker dollar versus these other currencies as well, because then the trade deal, no matter what, is just going to be much more of a stickler to the other countries, which is actually not a bad thing for the dollar in the long run. So we'll see how that pans out, but that's why I say it's very hard for me to think that you're going to see an aggressive move against the dollar in the short run, especially because if we have a wave 2 with coronavirus, odds are is that you're going to see a sell-off in the pound. You'll see a sell-off in the Swiss a little bit, not that much. You'll probably see a big sell-off in the euro. The EU itself is having troubles as far as coming to terms with how they deal with coronavirus. Every country is dealing with it on its own design and merits. Which, you know, you can say what we're doing here in the United States, but everyone's doing things different all over the world. So we don't know what's necessarily the right thing or was the right thing to do, but we do know what people are doing right now. So, and with forced lockdowns, that's the other thing. As we get around the globe, you'll see why I think the dollar is starting to no longer be that raging bear. So we have a short-term buy signal in the pound US dollar. So this is divergence. So where we have the euro and the Swiss being neutral to lower and looking for a sell-off, this one has confirmed already a short-term sell signal, but it may just have been an extreme. You know, the pound typically does that. Right now, short-term bull, I would be very leery, especially of this level. Any failure, if we turn back on these lows, which were just a couple days ago, here, if we fall below $1.27, $1.2761, that would mean we would be back below that major trend line holding up this bull market, okay? And then we would also be below this last swing low, meaning we would have made a lower move high and then a lower move low. And we know that when you're making lower move lows and lower move highs, that's indicative of what? A bearish market. So I would be very cautious. I would be, if you're long below that level, I think you're going to be on the wrong side. So, but you know, we'll see what happens. But right now we have a little divergence as far as the European currencies. The pound is also one of the biggest components versus the dollar index, so that's helping to edge the dollar index a little bit today. But like you saw, the euro already came back. So that one is not pounding the dollar. So that's why the dollar index is probably not going to swing, besides the fact that we have a Fed day so far out of line from where it was at the end of the day yesterday. So that's what we have in the European markets. Now let's go take a look at the U.S. dollar yen. This market has been hammering the dollar today. The yen, it's amazing. Like it does nothing, and then when it moves, it moves. And here we have a big sell-off today. Just like the pound is bid versus the dollar right now, the U.S. dollar yen is basically an offer versus the dollar right now. So what are we going to see with this? Is it going to be the continuation of this bearish market? Well, it certainly looks that way right now, right? So this market has been in an obvious downtrend. Like most of the other markets, it's been bullish versus the dollar since March. Thing though is that with this one stabilized already back at the end of July, and it's basically been in a range trade. So it buffered here. The upper part here was where we've been stabilizing for months. This market, although it's been bearish versus the dollar, it hasn't been, the U.S. dollar has been bearish versus the yen. It hasn't really been that extreme like it has been in the other markets. This one has been steady. It's been just grinding lower with some big corrections to the upside. And so that's the thing we have to just watch it. I think it's going to be very neutral, especially as we head into the elections. Now, today being a Fed day, this market is in play. You know, the bears are romping on this one. You know, unlike in the euro and the Swiss, where they're pretty neutral and not doing anything. The pound and the yen bulls are out there, and they are hammering the dollar. So that's where you're seeing the negative weight as far as the dollar index is concerned. So now let's go and take a look at something else in this trade zone, which is very interesting. So the yen, as you can see, like the past 3 sessions now, it has been moving. But look at how tight the range was for over a week. It's basically, it has 1-day moves, 3-day moves, and then it stops. So we'll see what happens if this is truly going to be a hammering beginning of another leg lower. Or maybe this is going to be the bounce before, or the last pressure before it turns back and just settles back into this range trade. Anyhow, it doesn't become bullish until it would break out above, say, like this 107 something area here. It would have to take out this last swing high, lower move high. So let's move this. There we go. Around 106.95. Yeah. So anything above that would probably spark up a potentially neutral to higher trade in the short run. Now, just as with the euro and the Swiss not making higher move highs versus the dollar, the Australian dollar, it's not doing either. It's been going up for the past few sessions, and it's making a nice little run at the high, but it's been just grinding higher. I mean, it is still in a bull market. This is where we have to say, like with the Asian trade zone, that the dollar this is where weakness prevails right now. But who knows how long this one will last. The thing is, this market has been a running bull versus the dollar for quite some time. You can say that there's all kinds of reasons for that and why that's going on, but if you really look at the trend, this thing, if we would go back to even this last swing low right here, we're kind of coming out of the trend, you know, so it's getting more sideways than bullish. It doesn't have that velocity. Now, it is a grinder. It doesn't mean it can't stop grinding higher, but it does in the short run look more neutral. So I don't think you're going to get so much pressure on the dollar here in this part of the Asian trade zone. And if this one starts to leak, basically coming lower here, like if you take out the last swing low, then that would mean, and without taking out this last swing high, that would be indicative of a short-term neutral to lower bias for the Australian dollar, U.S. dollar. Now, the New Zealand dollar, U.S. dollar, has been acting very similar to the Australian dollar, which is pretty normal when it comes to its relationship to the U.S. dollar. This one as well is doing the same grinding higher, and you can make the same argument that this one has a good chance at a short-term sell-off as well. It continues to make higher move highs and higher move lows, but like this last one market, if you take it to this low here, you can see that it just took out that trend line, and now it's just riding that trend line. So I think you really got to use caution being a bear. I think that anything above this 67.91 previous high, you don't want to be short against because it's a grinding bull. It has been nothing but a grinding bull for the most part for the past 6+ months. Now, there is every reason in the world to believe that it is setting up for at least a neutral trade, which would be great for range traders and certain types of swing traders, but trend traders could get chopped up over the next month and a half. So we got to kind of watch it with this one. But any failure from the swing low would have us, because that means we would be below the trend line for the major trend. We would be confirming lower move lows and lower move highs, meaning a short-term negative bias, and that would give us a reason to have a sense of direction there where we would be in a sell rally forecast versus right now. It's tough to not be in a buy dips forecast. And like I said, selling into this kind of a bull is just grinding slow erosion of capital. So unless you have a valid sell signal that you really trust, and this is what you do, then you obviously stick to your plan and stick to your guns. But even if you do have any valid sell signals, I don't see them hitting most targets, meaning that you may get the short-term sell, have a short-term profit as far as being up in a trade, but if you don't take the money and run, I got a feeling you're most likely going to see a snapback. So I would use caution with your risk once you are in a trade. I'm going with this market right now because there's some other inklings showing that dollar strength really is out there, besides the fact that these markets now had come off their highs, they made a low, and they have yet to make higher move highs. So even though their dollar is a little bearish right now, it's not making newer move lows. So let's go to the US dollar Mexican peso. Here's another interesting thing is this market has been getting hammered as well for the past 5 months, and now the US dollar Mexican peso is back at where it normally is if it's high versus the dollar. So this is actually at a very good pivot point. It could go lower because this market had been previously lower. If you look at it back last year, it was crazy where it was at. I mean, look at what happened over the past, here's 2019. 2019, it was, the low was February of 2020 rather, and that was, what was it? 1852 pesos to the dollar. And now we're back up to levels that's kind of the high end of the range, 21 to 22. So as far as if the peso is weak versus the dollar, this is a good area for it to hold. I don't see it getting lower than that, just because right now there's really no reason for it, unless now here's the thing is if the US dollar starts to really get weak, then you may see the peso but get back down to 18 to 16 pesos to a dollar. But right now, I think that you're more likely going to see it find some sort of support here. Anything can happen, definitely still in a bearish market here. But like I said, it's coming in on a monthly basis where you find typically some support and or stabilization rather of this currency. And you got to remember, this one has been in a bear market now for months. So to see at least a short-term correction like we saw here in June, like here it bounced off of 2150, which is just a little bit higher than where we're at now, and then it had a nice little rally up to 23 pesos. And then now it is slowly eroded and fallen back down here because it's in a bearish market. It's been grinding lower. So, and you get some of your biggest moves in a bear market, so that's why I'm saying it wouldn't be out of the realm of possibility to see a snapback to those levels. Now let's look at the US dollar Canada. And this is another interesting trade. This market bottomed on September, the first trading day of September on the 1st, and now has seemed to find some stability here in the midst of a dollar bearish pressure with some of your other major currencies. This one, obviously, you can see is pretty flat. I mean, it's lower on the day, but not much. It's been pretty much a range trade for a week. And still, relatively speaking, on the month, the dollar is stronger versus the Canada. So, right now, and it made a higher move high after it made a lower move low, then it made a higher move high, meaning neutral. So that's the thing is this market's been down in a downtrend for so long. I would be looking, especially with this area here, okay, because here's this lower move high, made a lower move low, lower move high, higher move low, higher move high, and now we've took out this level right here. So if we get a breach of this again, the US dollar most likely is going to have a nice corrective move up into this $1.36 to $1.38 area. One reason this we may be coming into this is that look at where we're at on the trend. The basic trend for the downtrend here, just like the other ones, we're starting to come out of it. So I'm not being a major dollar bull here with this long-term scenario that we're pulling out here. You're starting to see where the dollar turns. And so some of your lesser currencies versus the dollar that have been bulls versus the dollar are now starting to find a base, if you will, for the dollar, where I'm not calling for a major turn of events. I'm not calling for any major correction, but I think the divergence that we had been talking about and looking at over the past few months is starting to really show on the longer term trend what implications we have for different moves for different currencies and which way they will go versus the one-way trade that has been the 2020 coronavirus trade. Like the coronavirus trade right now is off the table in lieu of not having any new major lockdowns globally. So right now that is out of the picture. The overall trend versus the dollar too, you have to remember we're coming into the election, we're coming into the end of third quarter. Just on a profit-taking basis, I think you're going to see a lot of unwinding in the bears that have been trading against the U.S. dollar. And I think that's what you're seeing right now, slowly in markets like the U.S. dollar, Canada. Are you getting a major rally? No, but I think a lot of your long-term shorts are getting out. And we're coming into futures and options expiration. So between the Fed meeting today, we have the rollover going on for the futures and the options. Remember that there's a futures derivative also and options derivatives globally on these contracts or on these currencies besides just the cash forex market. And so that being said is you're going to have a lot of unwinding of those things. There's been a big interest rate differential that has happened between the Euro bond and the 10-year and the 30-year, like I spoke of. So now as far as Canada, we have to look at how are they managing the lockdowns, what do they have going on, versus what we have going on. There's a lot of things that aren't open there, so where they've been much more restrictive and holding to restrictions, whereas in the United States we've had it more opening up in many areas of the states, and we also have, the numbers are showing it, the profits and the retail sales and a whole bunch of other economic numbers. They've been down, I guess they've been estimated down so far. It's not hard to beat, but they're not just beating them, they're slamming them, so the expectations of the people who set these the consensus, if you will, their actuaries are way off right now. And that these imbalances are reflective of what's going on in the currency market. So the U.S. dollar Canada, we're looking for a breakout here. Now, as far as an exotic, and this is something I think you need to look at too, is Turkey. We have the U.S. dollar Turkish lira, how that continues to rally. So a lot of your lesser economies around the world, and the more you get away from the major industrialized countries, the U.S. dollar is a big flight to safe haven right now. And when it comes to, you look at the euro-U.S. dollar, how it has come off with the dollar over the past couple of weeks. It's really reflective also of the oil trade. And oil is a big deal for the lesser industrialized countries as far as in pricing and what they buy it in. They buy it in euros. They also buy it in dollars. A lot of it's done in the euro currency now. So that means that these other currencies, they're getting hammered by the euro. Okay, and they're also getting hammered by the U.S. dollar. So there's a lot of strength that is definitely coming in there for the U.S. dollar. So it's only the majors that really have been able to band a fight together. And the thing is, that's what I think will hold. Remember, we looked at the dollar index to start out. The euro looks like an upside down dollar index chart. And that's why we're most likely going to see this head and shoulders formation come to fruition as the dollar continues to gain strength versus a lot because we're going into an election once again, versus a lot of lesser industrialized countries. That's where the dollar is going to start to get a lift. Now, I'm not calling for a major move, but like this, let's just take a look at this on a, let's say corrections come and go no matter what. Let's just say we have a short-term correction here. Where could we go to, as far as the head and shoulders? Okay, well, we know that we have the 0.382 right here. Let's get this a little, there we go. All right, so here we put out some rays. All right, so for the 0.382, we'll put it right here, 1483. So we're not talking about any major sell-off, okay? Remember, the euro US dollar traded in a $4 range for over 12 months. Now it's been swinging all over the place this year, you know. So there's certain key levels as far as where can it go back to, where would it gravitate back to anyhow, especially like as Europe, you know, their numbers haven't been exactly rolling over like the United States. Our economy has been turning around much faster than things in the EU, not to mention they're looking at a lot of other issues and problems over there. So here's our downside targets. We have 114.83 on this head and shoulders. This would be a good area for us to come back to. I think this would be the extreme of where we would be, and then you know, we'll probably get another bounce back and be trading around this area where we're at right now as we head into the election. But should we see any real show of dollar strength, a hammering down on the euro down to $1.1321 or even $1.1159 down in this area, see where this area was here back in the summertime, we could very easily fall back to here and set this range between, say, $1.12 and $1.20. I mean, remember, like I said, the euro US dollar was in a $3-4 range for over 12 months last year. We may be setting a $6 range that we may be trading in for the next 6 months. Just as we deal with the potential of more lockdowns, elections, trade deals between Brexit and, you know, the EU and what have you, between the UK, blah, 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 blah. We have all these trade deals that all has to be hammered out in the next 3 months or 3.5 months. So with the option expiration and Fed Day, we're not going to have any real action until after 1:15. Be careful, low volume and algos will be running the trade. We're waiting to see a trade set up. It's probably going to take another couple days or a week. We are going to be having more and more webinars again. We just have been focusing on our proprietary customers, and because we have streaming stuff that we do for them exclusively. But as we now have adjusted our locations and logistics with things, we are trying to get the new pattern and get this stuff up and running to help have you know, more of an interaction with you guys. There's no questions on the chat, so we're going to shut down things. Want to say thank you very, very much for your time today. And if you want to check out the book, High Probable Japanese Candlestick Patterns, it's available on Kindle and paperback versions on Amazon.com. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And guess what? There's actually going to be a Kindle deal starting next Wednesday for 5 days where you can get it for free if you're a Kindle reader or whatever. So you can check it out and read the book for free and before it expires. And we will also have another discounted thing going on later on in another couple weeks if you want to purchase the book or the Kindle as well. Or excuse me, there's a discounted Kindle where we have price to purchase at the end of the month. So we'll be talking about that in future webinars. Thanks again, once again, for checking and signing in with us. And always go to www.forex-trading-unlocked.com for your Forex needs, and go and check out, you know, the one where I just did the analysis for the webinar. You go to the market Forex Trading Unlocked workstation page under the market analysis and education